Welcome to a new episode, Deep Dive today with the author of the legendary Stock-to-Flow Model, actually, which got first published in a book, in my last book, and I'm very honored having you on my show. Welcome to Plan B. Plan B, how are you?
Hi, Mark. Great to see you at last, and thank you for being on your show.
Yeah, great. Not to see you, but to hear you finally. We know each other for quite a while, actually. And you published the Stock-to-Flow model, and you're very famous for it. And the first question, as an icebreaker, of course, is Bitcoin in a bear market?
No.
Thank you very much. That was not just kidding. No.
That's all I wanted to say about that.
Exactly. I don't need more information. So Plan B, thank you very much. I'm relieved. No, just kidding. Since this is your first interview on a German channel, let's start off with some questions about yourself. The people should know you. So why is your name Plan B?
Yeah, Plan B is meant as an alternative for the current financial system, which I think is in dire straits. And I am from the traditional financial system. So I worked in finance more than 25 years in banks and insurance companies. I managed money from small bank balance sheets of a couple billion to insurance balance sheets and also pension balance sheets, which were close to 100 million or billion dollars. So we did that with a team, of course, but in those roles, you talk with the regulators and other investors and all the investment banks, and you can see the state of the financial system from up close. And that worried me. I guess that's no secret either, because is it today or yesterday that the entire German yield curve was negative, even the 30-year bond. That's crazy. That's for on any measure. It's crazy. And where as an investor do you get the yield that you're looking for? So it was a very natural thing for me to find Bitcoin on that path. And so Plan B is Plan Bitcoin, the alternative for Plan A, traditional financial markets. And that's where it comes from.
And it's your life now, because the first time I found you on Twitter, and I have to recommend it to everybody, you have to follow Plan B, because his insights, picking his brain is just great. And I will definitely put a link beneath the video, and it's worth following you. It's always a great insight. And I think you had like 3,000 or 4,000 followers on Twitter. And I remember I was on vacation. I was on a beach with my wife, and we were chatting over Twitter. And you said, "Oh, please stop putting my tag on every Bitcoin tweet you make." And I said, "Okay, sorry." Perhaps you remember. And my wife asked me, like, who you're writing to? And I said, "Hey, I'm writing to Plan B." And she said, "What? My Plan B? You have another wife on the side, or what's going on? You're not happy with our marriage?" So just a little anecdote. So but since then I followed you, and you published this extraordinary paper on Medium, the Stock-to-Flow model. And you're doing Bitcoin analysis and created your own Bitcoin price model, which we talk about in a second. But first, so why do you do Bitcoin analysis? Because you came from the old-fashioned financial world. You saw Lehman Brothers scramble. We had the Euro crisis. You just saw that the whole banking system is on the brink for a collapse. So what was your intention? When did you meet or find Bitcoin for the first time?
That was in 2013.
Okay.
That's when I first read the white paper. And
same here.
and Bitcoin was about $100 right then. So I thought, well, maybe I should put some money in there. I like what I read. I don't know anything about it. It was kind of weird and exotic, and certainly different from anything I had read before on finance and investing. So but by the time I read some more, and I looked a lot of Andreas Antonopoulos videos, of course.
Of course. Well,
and by the time I was ready to invest, the price was, in that same year, 2013, was $1,000. So I thought, well, that's too bad. I missed it. I'm too late. let's wait a little, because if it's something goes 10x, yeah, what are the odds that it goes another 10x? It will probably crash from here or something. And that happened, by the way. So it went from 100 to 1,000, then from 1,000 to 100 back in 2014. And I kept reading and studying Bitcoin. And when I saw the price recovering from 100 to 200 to 400, that's when I invested big time. That's when I thought, like, well, if it goes 2x and then another 2x, then it ain't dead. And that would be maybe a perfect time to start investing. And of course, I didn't have the Stock-to-Flow model at that time yet. So that was around 2015, I guess. So probably very similar as your experience.
Same, actually. Same year. I'm not kidding. It was the same year, 2013, and the same mentor, of course, Andreas Antonopoulos. And I was reading the white paper after a gig I had, a presentation of my second book. And I was so full of adrenaline and I couldn't fall asleep. So I had this white paper for a couple of months already on my desk. So I read it and I couldn't sleep afterwards. I woke up my wife and said, "Oh, that's it. That's a solution. It's better than a gold standard. And it's crazy. I have to buy Bitcoin." She was like, "Come on, get a divorce." So anyhow, and since then I'm on fire, actually, because I really think it's a solution. And I try to be a translator for Bitcoin and help to bring the mass adoption to the people. And that's what you do, actually. And your famous Stock-to-Flow model, we have to talk about this in a second. It got published in my last book, so I'm really grateful. So we had content about this, and this was a really big success. It was a best-selling book, and people just realized, wow, PlanB and a Stock-to-Flow model. So can you give us a short description of this model and what it measures, actually?
Yes, the Stock-to-Flow model, or in fact, the idea behind it is that people buy Bitcoin because it's scarce. At least that's what I did. The 21 million and the absolute scarcity of it. That's unique for Bitcoin, by the way. But the 21 million was one of the big reasons that I invested in Bitcoin. And also, if you look at other stores of value, if you will, like gold or real estate, which are the big ones that are not yielding an interest or dividends, right? It's the commodities, or, well, real estate has rent, but those stores of values are also very scarce in a way. So I felt that this scarcity of Bitcoin was first principle important. And that was my hypothesis. So what if I could measure or quantify scarcity? Because how do you measure it? I mean, I know what scarcity is, but how do you measure it? And can you compare it with other assets like gold and real estate? So that's where it all began. It was more like an hypothesis, still is, by the way, than something else. Like an hypothesis is that scarcity drives the value of Bitcoin, gold, real estate, and maybe some other investments as well. So I measured the scarcity in Stock-to-Flow, because I read that in the book that Saifedean Ammous wrote, the Bitcoin Standard, a must read, of course, for every Bitcoiner. And I knew Stock-to-Flow ratio also from commodities investing. And we did, well, not much, but a 1 or 2%, or if the balance sheet was in commodities, of my former employer. And I knew Stock-to-Flow, and I saw it applied to Bitcoin by Saifedean Ammous, just compared to gold in that way, and silver and other commodities. And my addition, if you will, my idea was to link it to value. So Stock-to-Flow ratio on the one hand and value of Bitcoin on the other hand. So I just plotted all the values, the monthly values of Bitcoin, of the Stock-to-Flow ratio, and the price for the last 10 years or 8 years at that time. And then I looked at the chart. I was just blown away by the fact that after you look at the logarithmic scales, of course, but that you see a straight line.
Yeah.
And that means there's some proportionality between a change in stock-to-flow ratio and a change in value, which is very unique. And from there, that basically is the stock-to-flow model, because you can fit a line on there. That's the linear regression. You can put the formula and all the confidence bands in there, but that's all statistics and in my view, more technicalities. It's more like the hypothesis that scarcity drives value. Scarcity can be measured by stock-to-flow ratio, and that there is this relationship to be seen in the data. And that to me, in all its simplicity, is the stock-to-flow model.
Yeah. Okay. So what did it tell you back then? What kind of price target will we reach with your first version of the stock-to-flow model? Because you made an update recently.
Yes. Well, and it's good to remember that when I made the stock-to-flow model, it's March 2019. That was at the bottom of the bear market. So we had gone to 20,000 in December 2017, and then we crashed all the way to below 4,000. And that was when I wrote the paper and made the model that predicted at that time $55,000 after the next halving, which was in May 2020.
Yeah,
which of course it reached.
Exactly, you nailed it.
But I, like you said, I updated the model to 100,000 because at the time when I published the model, maybe you remember this formula was 0.4 times stock-to-flow ratio to the power 3. And that 3 was rounded because actually it was 3.3 or 3.2 or something, depending on what data you... But then with the 3.3, you get 100,000. And I thought at the time that was a little bit too much, a little bit too aggressive, and maybe unbelievable.
20x.
20x, exactly. So I thought, well, just for simplicity's sake, I'll round the numbers. It makes the formula easier to remember, and we'll see at the time when we have to update. So, but of course, what I also did was put all the data and the formula, etc., on GitHub. So a lot of people were going to replicate the model and put it in Excel, make their own model, and started discussing with me, which was the reason that I published the model in the first place. I really, really liked that. So, and they were all coming to a little bit higher values, so to the around 100,000. So, and I knew, of course, I had 100,000 as well, but I rounded numbers, and that's why it was 55. And by the way, 55, 100,000, that's a 2x. What I mean, what's 2x among friends, right? And and especially considering the price being below 4,000 at that time. So I later updated the model with yearly data as well. I also changed the fact that I had a lost coin correction in the first model. I think I adjusted for the first 1,000,000 Satoshi coins, took them out. Later, I got a lot of questions about that, and later I found out that it doesn't really matter. It changes the formula a little bit, but it doesn't change the outcomes.
Okay.
So I thought, well, to keep the stock-to-flow ratio intact, because if you take the Satoshi coins out, it changes the stock-to-flow ratio a little bit, and it is not recognizable then anymore. So I thought, well, I take it out since it doesn't have any impact. I had 1 year more data, which is always nice. So together with that, I updated the model to say, well, hey, by the way, 55,000 was an underestimation. Let's keep it at 100,000. But we still have to reach that number. Actually, we have to talk about this because right now we're in a bull market, in a bull run. So let's talk about it. What do you think? Will we get to the 6-figure target this year or next year? What's your thought on it? Yeah, we have a lot of discussions about that. And of course, the stock-to-flow model sort of predicts the average value after the halving. And we all know it's not immediately after the halving. So in May 2020, there were some people that said, like, well, it's May 2020 now, it's the halving, you said 100,000, it's still at 10. So, the model has failed. But of course, there is some inertia, some lag between the halving, the market adjusting to prices. But it should be on average 100,000 in the 4-year period after this halving. And if it's on average, if it's an average 100,000, it should be at 100,000 somewhere in between. So in all those discussions, to keep things simple, I have said, well, if after 1.5 years, so that's somewhere Christmas 2021, you could expect it to be $100,000. So yes, I think it will be this year.
Okay, I'm relieved because I wrote this in the book as well, and I said this year we will get to the $100,000. So, and during the correction the last couple of weeks, were you afraid that your model will break, will fail? What do you think?
No.
Was there a time when you were sleepless and said, "Oh my God"?
No, actually. Not at all. And I know there were some articles because a tweet of mine that, I tweeted, okay, we're at the lower boundaries again in the model. We've seen that a couple of times before. It always feels uneasy to be there. I'd rather be at the upper bound, of course. And then I tweeted, well, what will it be? Make or break this time. And some articles presented that as that I doubted the model, or I was unsure, but maybe it's the fact that I'm not a native speaker or something. I never doubted the model. I'm not uncertain that this will. There's no guarantee either, but I'm not uncertain that this 100,000 will be met somewhere before Christmas. But I mean, it's always like I tweeted. It's always a bit uneasy when you're at the bottom. And you hope the model will hold because it's just a model, right? It's no magic. It's not a crystal ball. It's a linear regression through a cloud of data points. So, I could be wrong. Let's face that fact. And the model could be wrong. But on the other hand, we've had so many touchings of that lower bound. I mean, for example, when I introduced the model, in March 2019, we were even lower or about the same level as we are right now. And that was, by the way, the perfect moment, of course, to introduce that model.
And to introduce it, yes.
but it doesn't feel much different than back then. So back then, I didn't know if the model would work at all because, it was all fitted on the data that we had. And now we have 2 years of data where the price follows the model perfectly, or perfectly, roughly, I should say. Yeah. And by the way, I'd rather be roughly right than exactly wrong. And,
exactly.
Right? It is a rough model, and which is fine, and very simple as well. I like simple. I like rough, and not pretending to be very accurate in a market that you cannot predict very accurately. So. Yeah, no, I don't doubt the model at all. And I also think 2x or 3x, what is it from here, is not much over a time period of 3, 4, or 5 months. So we've seen that many times before. So I know it's, especially for noobs, it must be uncertain, uneasy, etc. But no. I've seen it many times, and no guarantees, but my money is on 100,000 by Christmas.
Yeah. We talk about this then later this year. But how would you feel if your model would break? Would it change something in your attitude, in your opinion about Bitcoin? Would you lose faith in Bitcoin?
No, it would break the model, but not Bitcoin. Bitcoin will go forever, and of course it would hurt a little bit.
Yeah, of course. The ego.
On the other hand, it's a model, right? how should I say that? I use models all the time, and they're not sacred to me. They're not, even if I invented them by myself, they're not sacred. They're tools, and they're useful until they break. And of course, we should monitor that closely. And some people think it's already broken. I certainly think it's not. And
we will see.
Yeah, we'll see. Time will tell.
It's a game of possibilities, and it's just we try to see into the future, and it's like a crystal ball, and it's possible that it works, and it's perhaps possible that it fails, but we will see, definitely. But so far it worked pretty good, actually, and that's why people listen to you. That's why you have so many followers on Twitter, and it's why you're on every podcast in the world about Bitcoin, and you did a great job for the mass adoption as well. And yeah, that's why I said, okay, I have to publish this paper in the book, and you agreed to it. So I'm really grateful for that. And people recognize it's a good model, actually. So, but let's talk about another very important topic. It's the 4-year cycle. We often talk about the 4-year cycle with Bitcoin because in the last couple of years, always when you bought Bitcoin in a bull run, for example, the last bull run in 2017, you bought it on a high at $20,000. You waited for 4 years, and right now you're above this level, so you never lost money, actually. So what do you think? Do you think Bitcoin will stay in the 4-year cycle over time?
Yes, I do think, the 4-year cycle is and the halvings are very important. Yeah. And people notice, of course, also that the halvings will reduce very much, right? It will get smaller and smaller, and maybe the impact of the halvings will get less over time.
Yeah.
On the other hand, the halvings are so much more than just a block subsidy that halves, or a stock-to-flow ratio that doubles, and the scarcity that doubles. It's like, and that's why I talk about phases in the stock-to-flow X model.
Yeah.
I really feel that Bitcoin as an asset, if it survives another halving, where really a lot changes, right? For miners, which are very important in the ecosystem, they have to survive. They have to plan this event, and their profitability halves. So they'll have to be able to survive that event. And if they, as a group, the miners, survive that event, that's a big thing for Bitcoin. And if there's a lot of investors that think that there will be a death spiral and a miner capitulation. Yeah. Every single halving, there is this group, Bitcoin will die, and there was a halving, mining capitulation, death spirals, blah, blah, blah. And the hash rate will go away, and the miners will stop. And every time that doesn't happen, so the investors also get more confidence and survive that jump into this next phase, if you will. So I think it will keep, very important, the 4-year cycle, at least the next couple of cycles.
Yeah.
I think it's the heartbeat of Bitcoin, and you can see it in the price as well. So
of course,
I mean, even without any model, it was one of the first things that I noticed, that Bitcoin can be flat for years, and all the price action is shortly after the halving. I don't know why exactly. Okay, the stock-to-flow ratio, or the miners surviving another halving, but no matter what the reason is, the price action is always in the 1.5 years after the halving, and that's I think that will stay.
Yeah, I had Dan Held on the show. You guys can watch the video, of course, somewhere here. And he's the inventor, actually, of the super cycle, and you know him as well. So, what's your take on this? Because he thinks perhaps there's a possibility that we come into the super cycle immediately, and we don't see another bear market. We go to $500,000, $1 million even. So, what's your take on this?
Yeah, Dan and I talk a lot about this.
No,
and, he must have told you. And
You did.
I'm not a believer of the super cycle, but it's more a question of timing, I guess. If you look at the efficient market hypothesis, so if the halving is important, and every 4 years, like I think it will, the price will go up after the halving.
Yeah.
Then there will be a time when the market will price this in, and will recognize this, and will front run all the other halvings, if you will.
Yeah.
So that would sort of trigger the super cycle, because then they will, for example, go to my model and see, oh, next halving it will be worth 5 million, and after that maybe what is it, 10-20 million Bitcoin. Well, let's bring the price there. Let's buy some and bring the price up. So I believe in the super cycle as a theoretical thing that should happen when the efficient market hypothesis is a little bit truth. On the other hand, I don't see it happening. And I said that before we went down, right? There was a lot of discussion about the super cycle. Yeah. I said I didn't believe in the super cycle because I think there will be another crash after the all-time high that we might see in Christmas, when Christmas comes around.
Under the Christmas tree.
yeah. Exactly. Or maybe it goes a little longer. I don't know. But in fact, I do think we'll go into 2022, the all-time high. But after that, there will be another low, another bear market, in my view, because in my view, markets are living things, and there's fear, there's greed. There will be another thing that sets off the fear. There will be people taking profits at the all-time high. I mean, that's one of the things I can see very clearly in my on-chain analysis stuff.
Okay.
So I can see it. That's why I'm so certain that we're not in a bear market yet, because the bear market is marked by very specific transactions. I follow those and count those transactions, and I'm not seeing them right now. So we're still. It could be that I see them tomorrow or next week, but now I'm not seeing them. So that's why I think there will be another all-time high above the 64,000 that we've already seen. But I also think there will be a time when, the bear sets in again. The fear comes. There will be a government ban. There will be a hack of a big exchange. Something. We don't know what it is, but it will spark the next bear market. And I'll be the first to tell you guys about it.
Definitely. Here on the channel, please.
It's a weird feeling but I'm sort of looking forward to that day. Not that the prices go down, of course, but many see me as the moon boy and only FOMO, price only goes up. That's not true. I guess I will be the one that's warning when everybody says, well, we're in the super cycle. So
I agree with you with the chain analysis. You see the whales, they're stacking. You see Bitcoins moving away from the exchanges, which is always a good sign for the long-term hot loss and everything. So and you said the bull market is still intact, and it's more similar to 2013 where we saw a double top. So I agree with you, because we saw it was bouncing around $30,000 a couple of times, and then we saw this steep rise to 40,000 the last couple of days, and now it's consolidating. Perhaps we go back to 36,000 something, but then I think we're off to the new all-time high. And of course, there can come something like China with the banning of the mining crackdown and everything. So what's your take on this? What the impact of the China crackdown? You think this was an important thing, or you think it was just something and Bitcoin will swallow it?
No, I think it was a very important structural thing. I think it doesn't kill Bitcoin, but it was the one reason, I guess, that why Bitcoin went down from 60,000 to 30,000. So it's a sort of a crash. And I mean, about half of all the mining capacity was in China, because that's where the rain and the hydro dams are, and the cheap electricity.
Yeah.
So the fact that and all that capacity is gone now. It's all gone, and it went to Afghanistan, and it went to America,
Iceland. Yeah.
Iceland, yeah, and that's a good thing, because it was one of the big risks, right? And every year it was the same. Every year was China bans. Oh, China didn't ban, and China, the rain season, and at the end of the rain season, there was a lot of drama always around
every year.
China.
Yeah.
Every
like
year,
it was a cycle, the FUD cycle.
It was a cycle on itself, and that's all gone because China has chosen not to play into this Bitcoin world and give its big role that it had away, which is, I think, a major mistake. But then, on the other hand, all the big financial and technological things that made the West great, the Google, the YouTube, the Netflix, that's all forbidden and banned in China. So I would actually be surprised if Bitcoin was not banned in China.
Yeah.
So I think for Bitcoin it was a big thing, and we saw the price dip minus 50%. But long term, it's a great thing because China is a non-player at the moment, and it will never have an impact again.
Yeah.
Major historical mistake from their part, I think.
Yeah, like Peter Thiel said, and the US government should take care about Bitcoin, perhaps should even buy some Bitcoin, because the government or the country who buys Bitcoin first or stakes it in the balance will win this race. And China definitely lost. I don't know what happened, because they're always pretty smart, but this time they bet on the wrong horse, I guess. So, but you said you're not a moon boy like everybody implies. So what's your bear case actually for Bitcoin?
Yeah, well, I think if we see the next all-time high, and I don't know if it will be 100,000, 200, well, it should be far above 100,000 if it's on average 100,000. So let's say it's $200,000, and maybe the Stock-to-Flow X model is still in play, and then that implies even higher prices.
288 to mention it.
Yeah, on average. So
average.
Yeah, that could mean that we could see 500,000 somewhere in, I don't know, this year to next year. But from the all-time high, we know in a real bear market, it goes down like 80%.
Yeah.
So whatever the all-time high will be, I don't know what it will be, but let's say it's above 200,000. So we'll go down after that 80%. In a matter of 1 or 2 years. That's what I still believe. So that's
so you would sell then at 200,000, would sell everything or just 50%, or?
Yeah, I think I would sell some. As a matter of
course.
No, not. I don't dare to. Yeah, I don't dare to sell it all, and because I could be wrong, and the super cycle could be there, and then
and then would be like, nah.
As a matter of fact, I sold half of my stash in a little after the all-time high in 2017, and because I thought, like, well, I went from 400 to 20,000.
Yeah.
That was all and more that I hoped for. Then I should be not greedy and take some fishes off the table and enjoy from it. So as a matter of fact, I sold half to reinvest it at around the time that I published the model, a little before that, of course. And I am planning to do the same thing again. I think I'll sell half, and over time, right? Not in one big batch, of course.
Yeah,
that we not
step
good for
step.
price.
Yeah,
step by step, I'll gear out and gear in, and in tune with the model. And I hope I can document that journey and tell my followers, which I didn't have in the last bull run and bear market.
Yeah.
But right now I can, but I have to how do you call that? Responsible disclosure. I have to be more thoughtful of it right now, because now there's
you have responsibilities now with over 600,000 followers on Twitter. So people listen to you, that's why it's very, very important that you take the steps responsible and what to do. Of course, yeah, it's different. It changed your whole life.
Yeah, yes and no. I'm a Dutchman. I'm not into fame and stuff. So that's why I'm anonymous as well. I like to walk on the street and sit in a restaurant and not be recognized. But yeah, it changed a little bit, and I have to still get used to it. I mean, it's only 2 years ago, right, that I had 0
Crazy.
or maybe 100 followers, and it sort of came over me. So I like it, but it's also new, and it brings sort of responsibilities that I actually don't want to have. So, but yeah, I'll find a way to do it responsibly. Hopefully,
you do it good. By the way, do you speak any German?
I do. Yeah, I worked in German for a couple of years.
Okay, so the next interview we'll do in German. Hey, another premiere.
my German is getting rusty, and certainly not
better than my Dutch. Trust me.
It's so close. It's so close.
I know. I understand a lot, and I like it. So okay, so we talked about that Bitcoin could be banned. So you think it's a possibility that government, central banks will ban Bitcoin, or is it even possible to ban a decentralized network?
Yeah, it's the number one risk that everybody sees, including myself. So yeah, I mean, it is a peer-to-peer cash system without any third parties, without any government. It is the separation of money and state, and of course, states don't like it. So yeah, they can ban it. They can make it illegal, maybe not outright, maybe not directly, but they can tax it. They can put a very high tax on it. They can ask you to do reporting on it that is undoable, and they can make all sorts of laws that make it impractical to the custodial wallets. They can. So doing your own wallet on your phone and stuff, they can force you to go to banks. They will fight, and as a matter of fact, it's maybe a bit like COVID in Holland, or I think in most of Europe at least. Yet they don't mandate you to take a vaccine, but if you don't take it, your life is over. Your life as you knew it is over, because you cannot move. You cannot eat, you cannot shop. So yeah, it's not mandated. It's not, but in a way it is, and it's forced upon you. And they can do that with Bitcoin as well. And I just hope that that some people in the government see that this is a system that works without know your customer information, without computer systems that can be hacked, like banking systems. So in a matter of in a crisis, when there's hackers that attack the banks, and the banks are not working anymore, or SWIFT is not working anymore, Bitcoin is the only system that will save our economy. A bit like the internet was invented to have communications in a nuclear event. So I think there will be people that protect it, or countries that will protect it, like El Salvador. So some governments might ban it indirectly, but not all. Technically, of course, you cannot stop it.
Technically, it's unstoppable.
No, it will produce blocks, and you can send in transactions, but it will be illegal, maybe. And in fact, that's a big theme. I have said in other podcasts that we might hope for 100,000 or $1 million Bitcoin, but I always said beware what you wish for, because
Collateral damage.
A world that a $1 million world or Bitcoin world will not be a nice world. It will.
Bitcoiners.
No, exactly.
Yeah.
It will not be for nothing. There will be a trigger event. Why is Bitcoin 1 million? And when I said that was a year ago, I never ever could have imagined that we're going towards that world as fast as we're going to that world now with COVID and all the control and extreme
government.
Yeah. It's unbelievable how the world can change in a year.
Yeah.
But it is in line with a $100,000, $1 million Bitcoin. So yeah. We are
at a fourth turning, definitely. We see a paradigm shift all over the world, and it changed so fast. And I think Bitcoin is more important than ever before. And if you see the cycles end, and it's always going aligned with a new monetary system, and the governments will tax it, I'm sure about that. They will perhaps even ban exchanges or something, so you can't hop on to the network anymore. But I agree with you. There will be jurisdictions where you still can buy Bitcoins, because the countries in the world, I think it's around 150 countries, they never agreed to do one thing at all together at the same time. So they couldn't ban drug use or the trade with drugs or something else. So it will be extraordinary times. And I agree with you as well. If we have 1 million euro of dollar in Bitcoin, the world is actually fucked, because it's like it's just crazy then out there, I guess. Then we have hyperinflation.
Yeah, I totally agree. And that's also why I think some of the critics of my model that say, okay, Stock-to-Flow goes to infinity and then Bitcoin will be worth infinity, so the model is flawed. I think they're wrong, because if Bitcoin goes to $1 million or 5 million or 10, the word dollar is not
necessary anymore.
It doesn't mean anything anymore. It will be like paper. A Venezuela currency, and so I think one or two more halvings that we were talking about dollars, and in fact they are of course working on a new world currency. The SDR could be one.
CBDCs.
CBDCs will be in there. So you can see those trends as well. And it all sort of comes together in a way. And Bitcoin is a part of that. And a very interesting time is ahead, but also a very volatile and risky time.
Definitely.
Maybe not a very nice time.
Yeah, definitely. So what do you think? Has Bitcoin the potential to fix the world? The saying, fix the money, fix the world. Will there be a Bitcoin standard, or is it just like a stupid idea from the Bitcoin maximalists?
No, I think Bitcoin, the technology of sending value over a network without a third party is so important and so new and so great. It really is an invention like the internet that did the same with information, and like electricity. I think it cannot be put into the box again. This thought, this invention will be there and will face all the risks and opposition that all the major inventions in the world have gotten from their respective governments. They will attack it. They will oppose it. They will criticize it. They will ban it. They'll kill people for it. But in the end, you cannot deny it. It is the better system to send money over the world without any risk of hacking your information, with any risk of privacy breaches. And it's also very energy efficient. If you look at the banking system, I mean, everybody's talking about the energy that Bitcoin uses, but the banking system uses like 100 times more, with all the people that are working there and all the fraud and stuff that's happening. And I mean, this is the more efficient system. So it's an entropy thing. It's a thermodynamically a certainty that Bitcoin will win, in my opinion.
Same here. Same here. That's why my next book will be a pure Bitcoin book. It's called The Biggest Revolution of All Times. And I think money, we all have to do with money every day. We work for it. We need it actually. But
Yes.
very little people know how money is created in our world, how to invest money. And yeah, I think there will be central banks who will stack actually Bitcoin. So do you have any clue about which country could that be, or which central bank will be the first central bank or the first government who stacks Bitcoin?
Yeah, well, El Salvador, of course, made a great step in that direction.
Definitely.
And if it weren't for the background context of China banning all this stuff, that would be major news and a trigger for higher prices. But yeah, actually, I think it's, and I've always said that it makes a lot of sense for all the countries that have money supplies smaller than Bitcoin, and that's about 120 or 130 countries at the moment, to adopt Bitcoin, because they don't have to care about their and put energy into their small dying currency that they cannot get any big loans in from the IMF or any other private investor. They're just too small, and they will be like an emerging market. They will be seen by investors like an emerging market with their currency that will be worth nothing. And they could do their country and their citizens a great benefit by adopting Bitcoin. And El Salvador had the guts to do it. But it would actually make sense for a lot more countries than El Salvador. I'm a bit surprised actually that it got not much countries followed El Salvador's example, and I know it takes a long time, right, in Congress or in the government to make decisions, but this, especially in a dictator state, this could be done pretty quickly. And yeah, it would also be a sign of guts and sovereignty towards an IMF and a US that is constantly putting you on the blood machine, on the debt to getting you into debt, just enough not to kill you, and but keep you on the debt and paying interest all your life. And that must a lot of countries must feel that way, must see that, of those smaller countries, and Bitcoin is a way out. So yeah,
the only way out, I guess. That's why in my last book I just wrote that the Deutsche Bundesbank they have like 3,600 tons of gold. So why don't buy digital gold? If they just put like 100 million or even 1 billion euro in the digital gold, I would say we could save our prosperity for the next generations actually, because they would be the first move advantage, and they have a real store of value beside gold, digital gold, and it would be just a big signal, and we could have a great future actually in Germany, like the Norwegian fund, for example, for the future.
Yeah, no, totally agree. And but it always takes time for new money to be accepted. You saw that with gold as well. I mean, India, for example, totally missed out on the gold. They went for silver. And that's one of the reasons that they were a very important and powerful country, India. And they lost out on the English, of course, and the choice to go with silver instead of gold was, of course, a wrong choice. But that was a major part of that. And yeah, I think it will be the same with Bitcoin. And the early adopter will win, although it's very risky, of course. Now I mean, the IMF actively opposing against it. The US,
they hate it. They all hate it.
Yeah, they all hate it. So
because it takes away their privilege. No printing money out of thin air, putting us in slavery and keeping the Ponzi scheme of fiat alive. That's it. You know.
Yeah, it's called seigniorage, right? In central bank terms, and central banks make cost-benefit analysis of their seigniorage, and especially for the US, of course, it doesn't cost anything to create dollars and they can spend it as they like. But every country makes their calculations about seigniorage, and
and the
it's
country
very
law
hard.
effect. Yeah.
Yeah, exactly. And it's very hard to give that up.
Yeah. They never will. They will fight. It's all out war, actually, Plan B. They will fight desperately till the end, because it's just putting them on a special situation, and they are privileged. So that's why they will try to keep it alive, of course. And it makes a little percentage of the population always richer, but the mass is getting actually poorer.
Yeah, I find it very interesting to read these days about the separation of state and religion at the time. So how did science win in the end? Because religion was so powerful. It controlled everything. They had all the force, and they were forceful with the Inquisition, etc. But how did science win in the end? I think it was just a matter of necessity or something, that you cannot deny the earth is round and that it circles around the sun. So people will, one by one, see it's true. And maybe it's a slow thing that cannot be denied, and it will win. That's how I see it. But I find it very interesting to read about how that transition went a couple hundred years ago with knowledge, with science.
It's the same with Bitcoin. You know, it's based on a natural law and math, and people will just recognize it's just superior to our fiat Ponzi scheme, and it's Gresham's law. You know, and we'll see. It will happen. So listen, Plan B, I could talk for hours with you, and I'm sure we will repeat it. But I would like to finish off with some rapid fire questions. Are you ready?
I'm ready.
Yes. Okay. Will a reserve currency still be a fiat currency in 2030? Yes or no?
No.
Will the euro fail?
The euro will fail. Yes.
Will the European Union fail?
Yes.
Okay. What's your favorite altcoin? Sorry.
I hope you didn't. Maybe I should say Dogecoin, because like Elon Musk, it's so obvious that's a joke, and it's so that people actually believing Elon Musk thinks. No, well, anyway, so I'm not into altcoins, as you know,
no shit
at all.
Yeah.
And I'm
just teasing you. I'm teasing you.
Don't do that.
Okay.
No worries.
Talking about Elon, is Elon a scammer?
Yeah, well, he betrayed Bitcoin big time.
Yeah. Is he understanding Bitcoin at all?
No, that's why I hesitated. I think he's just learning, and it's all out there. And he's learning in public, as they say.
I guess we have to forgive him, huh?
That will be hard, but that's
I know.
In the end,
He's scammed.
Yeah, he is a weird guy, and that's probably how it should be when you do that stuff with rockets and electric cars.
Exactly. Too much visits to coffee shop in Amsterdam, I guess. You know?
Exactly. Yeah. Beautiful things come from there.
Trucks are bad. That's why I'm straight edge. So, do you have a diversified portfolio? There are any other assets you are interested or invested in, or is it just Bitcoin?
Well, I was an old gold bug, so I had gold.
Okay.
Real gold. I self-custodied, if you will, and I have real estate, of course, and cash. But no, the thing is, if you start with Bitcoin a little bit, and you wait, like, well, when did I invest? 2015, 6 years ago. And you wait 6 years, then the chances are high that percentage that you invested will be a very large percentage, like 80, 90, maybe more. And that's what happened to me, of course. Yeah.
Okay. So, where can people find more about you? I think it's on Twitter, isn't it?
Yeah, mainly Twitter. So that's Plan B at $100 trillion. And I have a website with all the articles and podcasts. So your podcast will also be there. And it's planbtc.com.
Cool. So are you still working, or are you working on another model as well, or do you just keep on try to make it better, or is there anything you work on right now?
Yeah, there's lots of projects I work on. They're mostly not in the open.
Okay.
But I'm working on trading bots,
Cool.
chain analytics, those kind. And then I do a lot of cooperation with hedge funds and other funds to talk to them.
Interesting.
Sometimes we develop models together. So I'm sort of doing what I did in my former job, but then fully focused on Bitcoin, and I love it.
Cool. Yeah, so you made your passion to your profession. This is great. You left the dying world of finance and banking and just came to the better side, to the good side, not the dark
Exactly.
side. Yeah. Listen, PlanB, it was a pleasure. It was great talking to you. It went by like this. Time flies with you. You're a great guy for the space, and keep your good work definitely alive and share it with us, all of us. And yeah, I really, really, really liked it talking to you. Thank you very much.
Thank you, Mark.